Do now have Ford's December auto sales. They came out at the top of the hour and they were better, in fact, much better than expected. Ford reporting a 33% increase in December sales versus a 13% increase, which was expected. And on that news, Ford shares being bid up 57 cents a share, 11.15 per share. Ford also saying they expect their full year market share to rise to 15%. So that would be the first up market share since 1995.
And for a closer look inside the numbers, let's bring in Jessica Caldwell, senior analyst at Edmunds.com. She joins us from Santa Monica, California. Jessica, welcome to Bloomberg News. Good to see you again.
Hi, good to see you.
Jessica, anything about these numbers surprise you? 32.8%, as Lori just mentioned.
Yeah, we were expecting a pretty positive numbers to come out of Ford. You know, they really have shown a lot of success, especially towards the latter half of this year. And really, they're looking like a whole new company. So we expected them to be up. This even goes a little bit further than even the expectations that I had a few weeks ago.
And what were those expectations?
Well, we thought that they would probably come in sales-wise, total sales-wise, a little lower by a few thousand units. So, you know, I think this is more positive. But we saw a lot of shopping activity right up until Christmas, which is unusual for this year. Usually between that week right before Christmas, we see kind of shopping activity sort of die. But this year it was actually pretty strong. So I think that's going to help the overall market.
Now, Ford, sticking with Ford, since we just got the numbers, and Jessica will also ask you to preview GM for us, said it prepaid $500 million as part of a compromise with the UAW, pretty complicated deal. But the bottom line is that Ford seems to be showing its financial confidence. Would you agree with that?
Yeah, definitely so. I mean, they're in a much different position than GM and Chrysler. They still have a lot of debt they have to pay off. They're starting from a much, a setback at a much further back than those two companies, but they're still making progress. And I think it shows, really the strength of their business, even with the financials, with the product, with everything across all of their entire organization, which I think is good news.
And Ford, of course, as we know, never got a government bailout, totally dissimilar to GM, which is emerged from bankruptcy. We're waiting for an IPO for GM. And of course, GM's had a couple of good months here. So do you expect such good things as we just heard from Ford from GM later this afternoon?
I think it'll be positive from GM as well. I think really GM's test is this coming year as they really move forward and try to, really prove their business and prove to all of, the taxpayers that, are the owners, that they can survive and they are sustainable. But they're definitely further back than Ford in terms of progress. But it looks like they're going in the right direction.
Jessica, when we take a look at these numbers that have been coming out, can you give us a sense of what that Cash for Clunkers program might have had? Was that an impetus here?
There still is a payback period, that we're paying. It's really slight right now. But I think, for the most part, Cash for Clunkers was a huge spike this year. And I think if Cash for Clunkers didn't happen, I think December would have been an even better, better news, better month. But we still have that asterisk of December is a good month. Not the best month because, really August took that mark. But, I think it definitely stirred up some interest. But it did pull buyers, ahead. So people that, still could be buying vehicles right now and even until next year bought during the Cash for Clunkers period. But right now the payback is very, very small.
Now, can you tell, is it possible to forecast at this point when we might achieve the monthly sales levels that we got with the Cash for Clunkers stimulus?
During Cash for Clunkers, we were at about a 14 million unit selling rate. So, in comparison, this month will be, somewhere over 11. So we're not really too close yet. And really, the first quarter of the year is always a tough one for automakers. So we probably may hit the 14 for one of the months next year, but I wouldn't say it would be soon. I would say definitely be towards the middle half, perhaps the summertime.
What is it going to take? What are the macro factors that you want to see in place despite these improvements we're seeing without the Cash for Clunkers stimulus? We are counting these months as positive. Investors, again, bidding shares of Ford, for example, higher on these latest numbers for December. So what, at the end of the day, is it going to take to revive the U.S. auto industry back to full health?
Well, I think the consumers have to get back in the market because right now there's just so much pent-up demand of people that would have normally bought vehicles but have held out because of the recession. I mean, a few years ago, we were selling, 16, nearly 17 million vehicles per year. This year, it's going to be about 10.4. So that's a whole lot of people that are not in the market, and they, really need to come back for this to regulate itself and to go back to more healthy numbers.
And Jessica,
so,
Jessica, taking a look at, again, the December numbers, were you surprised at at the strength of the consumer towards the end of the year? Because as you mentioned, a lot of people a little bit wary about spending their money on a big ticket item like a new automobile. Did the consumer strength surprise you?
Not really, because here's the deal. December is always a good month for automakers. It usually, ends the year on a high. There's usually some, pretty decent incentives. Automakers also do a big fleet month, generally speaking, for December to make those numbers look better. So it's not all 100% retail sales. There is a lot of fleet, especially amongst some of the larger automakers.
Right.
And Jessica, I was reading a report on Edmunds.com. You say that web activity, and I think you're referencing this, but it's a cute quote, through the roof. Web activity was last week. So which of the brands of cars are getting the most attention from your users?
Yeah, well, I think after the Pontiac and Saturn announcement, I think that we really saw, that was the biggest jump. Of course, those vehicles weren't out there because we know, looking at inventory, there's only a few thousand vehicles nationwide, so there wasn't enough really for the interest. But we also saw big jumps from some luxury brands like BMW, even Ford, Honda. So I think a lot of the, sales campaign got people to get out there and take a look, which is good.
Indeed. Jessica Caldwell, senior analyst at Edmunds.com, live from Santa Monica, California. Many thanks.